Hi, team. Welcome to our Wednesday night training for our whole team. I'm so excited for our guest speaker tonight, my friend. And you guys, this is like a little backstory. So I have known her, I'm going to say, for 20 years, literally before I was even married to Jay. She knew Jay too. It's a long story. But back then I called her Damari and she goes by Damari now. And I'm like so confused. I can't get the way I've always said it out of my head. And so it's funny. The first time I had a call with her and I called in the office and I was like, can I speak to Damari? And they were like, who? I was like, oh, Damari. Okay. So anyway, my friend Damari does my taxes, and I don't have any clue what I'm doing when it comes to taxes. And she offered to do this workshop for us today. And I'm so thankful because I know you guys have lots of questions about taxes. And I'm usually like, ask a tax professional because I'm not someone who is a tax professional. So I am super excited to introduce you guys. And she is a stylist too on our team, which helps, I feel, in knowing exactly what our situation is and how unique our taxes can be. So she knows all about that. So anyway, I'm going to let her take it away. If you have any questions during this call, go ahead and put it in the chat and we will check it out at the end. If there's anything important in the middle, I'll interrupt and tell her to answer it. But I think we'll let her get through the whole thing. And I'm sorry if I'm talking too fast, Sarah. We'll try and talk a little bit slower. So anyway, without further ado, I introduce you to Damari.
Hey guys, Damari here. I am very excited to be with Team Threefold United. So I'm very happy that all of you guys came on here. Brave souls wanting to know about taxes. I do my best to try to keep it entertaining as possible. And you know, to get all of your questions asked. So I have two disclaimers before I get started. And one is that everyone's tax situation, can everybody hear me okay? Can I just see thumbs just to make sure? Yeah, okay. Everyone's tax situation is different. So please keep that in mind. Taxes are as unique as you are. Truly, they really are. Everyone is just has different, they're either if you're in different state or you have more than one kid or no kids, married, not married. So all of those variables can impact your taxes. The other thing is that due to myself and people in my industry right now, we are unsure as to what impacts the stimulus and COVID and all of those things will have, and even the presidency, to tell you the truth, because those things can affect how the IRS changes tax laws. So please just keep that in mind. For the most part, a lot of what I'm going to be teaching is pretty standard. It might not change, but things can change sometimes with these, you know, changes of government and so on. I hear someone, so I'm not sure if everyone's muted. Encourage each other. Okay, so I am going to get started and I'm going to share my screen. I'm going to be turning that way because that's my second screen, so in case you don't see me as good. But I want to show you, true to my nature, I think in memes, okay guys? So that's how I refer to a lot of things, because I think memes are funny, and and for the most part I can imagine them and picture them in my brain like that. So this is what I imagine people look like when they think of taxes. And and anybody here watch The Office? Any takers? Yeah, so this is what I feel like the accounting department there. So we're going to be talking about 1099 and MLM business, easy, simple, and clear for the MLM entrepreneur. Believe it or not, guys, this might come as a shock to you, but in the eyes of the IRS, when you receive a 1099, you are a business owner. Now, I'm just going to give you a little bit about myself. I am Damari Perez, aka Damari Gold. That's how you can find me on Instagram. A little bit about my credentials. I have a master's degree in accounting and finance from University of Laverne, a licensed agent for the IRS. I am an enrolled agent, which means I can represent, I can do audits, representation, and preparation. I have been in the accounting and tax industry for over 14 years. So accounting, I started a long time ago, and then I concentrated into taxation 10 years. And I am the owner of the Gold Standard Accounting and Tax. I am a mom of 2, boy and a girl, and a stepmom of 2 girls. I love donuts, coffee. Who likes donuts? I swear I'm like, I was Homer Simpson or a police officer in another life, because I literally love donuts that much. So, and the ocean. My lifelong dream is to live by the beach, and my obsession is shoes, because I have a ton of shoes. And Color Street nail strips. Who has a ton of Color Street nail strips? Because like you can't just choose one, right? And I am passionate about empowering women and female business owners step into what I call financial light. It is very important for me for women to understand their financial situations beyond taxation, but you know, I focus on taxation. Now, what is a 1099? How many of you feel like this little girl? Like, what is a 1099? So I'm going to start there. A 1099 simply means that you are considered a contracted worker or contracted individual. For tax purposes, you are considered a sole proprietor. When you are a part of an MLM or you provide services to people that as a non-employee, this is services or sales or anything like that, you will receive what's called a 1099 from that employer or from that person, contract, whoever that is. As it is, most MLM companies have 1099s. And the reason why that is because you are not an employee of the company. You are considered a contracted individual. So in this case, we are contracted sales. Okay, what is a sole proprietor? Like I mentioned before, believe it or not, you are a sole proprietor, which means that you own a business. You technically own a business when you receive a 1099. With a 1099, you are considered self-employed, so you are not an employee of the company, and that is what we are not. We are not employees of Color Street. We are contracted individuals. So when you're contracted individuals, that means you will have a sole proprietorship, individuals, not a corporation. And the reason why I listed the different types of corporations here is because a lot of times people get those confused, and they might think like, I'm a corporation, or what does it mean to have a corporation? But there's different types of corporations. There's LLCs, which is a limited liability company, an S Corp, which is a small business corporation, and a C Corp, which is just a regular corporation. I'm not going to bore you with the details on those, but we are going to go into what you are considered as a 1099. In the eyes of the IRS, it's self-employment. So easy a caveman can do it. And I know that it's like, what, right? Like, what the heck? How am I a sole proprietor? How am I a business owner? How did I all of a sudden shift into this, right? This is the schedule that you would be filing, which is a Schedule C. It is a sole proprietor schedule for business owners. As a sole proprietor, you are subject to self-employment tax. And that tax rate is 15.3% at the federal level. I know that not all of you are in California. California does have their own subject taxes, which is very high, but I'm not going to go into states right now. I'm just going to talk federally. The advantages, there's no double taxes, which means that you basically, everything gets filed under your personal tax return. So there's no separation. You don't have to, if you're married, you don't have to file separate from your spouse. This all goes into your personal tax return as it would if you had a W-2, if you had just regular, regular income. No additional in state, so which means whatever you file federally, it just goes into state and you just pay everything according, the same. And it's tax based on net profit. So the tax that you incur, you're gonna have it based on your net profit, not on your gross profit. That can change if you own corporations, but which means that It's very helpful when you have a loss in your business, because that basically helps your overall picture, I guess, if you have other sources of income. And it's great for startups. So let's say I'm going to give Julie as an example. I know Julie is open about her her earnings in Color Street. So it was great at first, but then we really had to make a shift to do some really aggressive tax planning. So it's great for startups. Many of you, I'm not quite sure what situation you're in with Color Street. Maybe you're earning a lot more, maybe you're not, maybe you're just starting. But it's great for a while until you reach a certain amount of money. And that can really just depend on your full scenario as a married couple, individual, and so on. The disadvantages are higher audit chances. Now, I don't want to scare you, because it's not like, oh my gosh, I'm going to get audited. It's not like that. So that's why I am going to give you the secrets. And I don't know, maybe because you're recording me, I don't know, maybe I'll have to do it once you turn me off, and then I'll give you the secrets. But there is a little bit of a higher audit chance, just simply because people miscategorize things, or sometimes they take deductions that are really just not allowed within the industry that you're in. So you have to be very mindful of what you're doing in your business, and not to kind of miss that and mess up and, you know, do yourself a injustice there. And there's less flexibility with deductions. And the reason why I say that is because you really, really have to be mindful, because again, if you get audited, you have to show proof. In the eyes of the IRS, you are guilty until proven innocent. It's the other way around. So they kind of say like, hey, we want to know what you did here, so you have to show us what you did. And if they deem that you were wrong, then they'll take it out and they'll be like, nope, sorry, you owe us money. And the personal liability, this is more for like if you own other types of businesses, if you ever get sued, things like that. But we're not going to go into that, because we as stylists, we really don't have a high risk business. So we really don't run a lot of like high risk. So I'm going to go on what I know that you guys really want to see. And I love this guy. I feel like he's so versatile. Like you could just literally put anything on him and it would just be like, yeah. So mine's hello IRS, cat is out of the bag. No more guesswork on tax deductions. Who wants to know about tax deductions? Hands, I need to see your hands because I know everybody's silent. Okay. As a stylist, I know this is gonna seem like, what? I could do all that. But please be mindful again that your scenario, your particular place where you are in Color Street and how much income you receive from Color Street, please just be mindful of that. And I'll go into it a little bit further. I'm just going to go in through these deductions and then kind of walk you through a couple of things. Your cell phone. Okay, first off, how many of you are handling your business on your cell phone? Exactly. So guys, make sure that your portion of the bill, your portion of your cell phone bill is a tax deduction. Now, here's where the difference is that depending on how much money you make, if you solely depend, like Julie, in Julie's case, her income 100% comes from Color Street, which means that she can take 100% of her phone deduction. Like she can take 100% of her bill and take a deduction out of it. Now, how do you calculate whether you make, how much you make? Well, it really just kind of depends on your tax preparer. You have to kind of see how much money you're making. And if you're just starting out, I'd say a safe space would be like 25% of your phone bill. So you get your phone bill and then you multiply by 25% and then times 12 because you're going to take the whole year, and that would be your deduction. Okay, makes sense? Can I get just some thumbs up so I know that it's making sense? Okay. iPhone, how many of you guys purchased new iPhone? Exactly. That can also be a deduction. Now, again, keep in mind that rule, how much of your income is coming from Color Street. Now, if you really are planning to make Color Street 100% of your income and you're going to go all in, you know, then yeah, take the full deduction because the intention is there, right? But if you're just kind of doing it as a side gig, not sure, you know, then takes a partial deduction of it. How many of you purchased an iPad? So same thing. A laptop, same thing. A vehicle purchase, here's why I have an asterisk. Again, it really just depends on what you're doing with the business. If you only made $600 with Color Street, that doesn't make sense. So please do not get yourself in a situation where you get audited and you say, well, Damari said I could take, no. Okay, I have it recorded. I'm telling you right now, no. So really just depends on how much money you make with Color Street. Marketing, VA services, bank fees, gifts, bookkeeping, continuing education, licenses, classes, training, consultants, memberships, merchant fees, software, apps, recording equipment, tripod. I know these are very big in our industry because we are essentially, if you're creating videos, if you're doing all of these things to kind of be on social media platforms, then these are things that you can definitely take advantage of and use as deductions. Website, domain service, meals. Oh my gosh, let me tell you guys, I have heard this so much through like MLMs and different people that are doing marketing, multi-level marketing type things. Your daily meals are not deductible, guys, okay? They're not. And if you go to Starbucks, your daily Starbucks habit is not deductible, okay? The only thing that is deductible is if you go meet with a client and you're talking to them about, let's say, or a potential like enrollee. If you say like, I met with so-and-so, I treated her to Starbucks because she was gonna become a stylist, you write the name of the person that you met with and basically what you talked about. So you could say, you know, starting a stylist, take a picture of it, and that is for your records, okay? That's another thing, keep receipts. A very common myth is that bank statements are enough. They're not. In a tax audit, they are not enough, because if you go to Target a lot or Amazon or any of those places, you can purchase anything for yourself personally and take a deduction. And so the IRS kind of can look at that and be like, well, what did you buy? You know, at Target, you can buy anything. So you want to be able to show with that proof without a doubt that you purchased something for your business. How many of you buy supplies on Amazon for your business? Exactly. So you want to, the great thing about Amazon is that they keep record and stuff like that. So just, be like end of year planning, create a day for yourself where you kind of gather all of your things and your receipts and stuff like that and put it in a Dropbox, put it in some sort of cloud-based thing where you're backed up so that you have all of that information in any future case. Okay. Office supplies. Yeah, we all have, we all need the supplies. The difference between office supplies and office expense is like if you need, like I have little trinkets, decorations, and things like that. Those would not be considered like office supplies. Those are office expenses, right? Shipping fees. How many of you guys are shipping right now? Yeah, so shipping fees are part of that deduction. Home office. The reason why, again, I have an asterisk there is because there are two different ways when it comes to home office. I won't bore you with the details on how to do the home office, but there's something called a safe harbor. So you can take the safe harbor, which takes like the square footage of the area that is meant for your business. And it needs to be like a specific area that you use for your business. Like I have, an area where I keep my, all my nail polishes and all that stuff, right? So it has to be a very specific area where you keep that stuff. And insurance, but in this case, that probably wouldn't, you probably don't need insurance. Okay, so as far as the tea is concerned, I'll give that to you after we turn it off because I don't like anybody quoting the tea when I'm giving it to you piping hot. So for our business, things that I think that other people after watching this recording can determine in our business. When you are giving gifts, how many of you guys are sending free samples or sending packages to people and so on? Okay, the key there is you have to keep track of who you're sending these items to in order to take the deduction as a gift deduction. Okay, so the gift maximum is $25. In our industry, we don't really send anything that's like more than $25. So if you want, you can take the maximum deduction and put $25. but be sure to track who you're sending to. So write their name, their address, and what you sent them, just to cover your basis. And that is so that when your tax return has to make sense. So when you're filling up these areas, and if you only made like $600 and you sent out $1,000 in gifts, might not make a lot of sense. So you might want to break that up if you think that one is like, okay, maybe I gave more gifts or I gave more items. Maybe break it up into marketing, you know, so that it doesn't look off base. So maybe you want to do 600 or 500 in marketing and 500 in gifts, because when the IRS audits, they don't audit the whole picture. Sometimes they just pick and choose certain items. And what they're looking for is if you're consistent and if you have basically your crap in order. So it's like, if they say like you reported this much and you send them like that much in like your statements or your receipts and it shows like perfectly in order, then they're like, all right, whatever, we don't want to bother with you. That's another thing that you have to keep in mind too, that if you're not really making a lot of money, if you're making below $200,000, chances are of you getting audited could be slimmer than the other folks, because most of the time they want to, and obviously depending on too, if you fat finger any number in there, then that could really make a difference for you as well, right? Because you can put in $10,000, right? And you have like a $10,000 loss in your Color Street business. They're gonna be like, what the heck are you doing, girl? So your business, our Color Street business isn't gonna give us a $10,000 loss, right? So those are some things you wanna keep in mind. Also, there's certain, like with us, we don't have a lot of overhead. So that's another thing you have to keep in mind. We do everything online. This is online business. So when you're buying something that has to do, like if the first thing you're thinking of when you buy something is Color Street, then you know that that is a business deduction, because this item is being used for your Color Street business. And that can be like a laptop, because sometimes laptops can be used, right? It's versatile. So you have to kind of take those two things into consideration. Are you using it primarily for your Color Street business, or are you using it for other reasons? And that's when you want to take those percentages off. I'll come back to the rest of that. And here is, I want to introduce you guys to my team in the Gold Standard Accounting. This is my boo James, and he is the operations manager, so he thinks. But and then there's Edith, she's our bookkeeper, Crystal, junior staff accountant, and Dahlia, the executive assistant. Dahlia is actually a Color Street stylist as well, so she knows and helps me with all that stuff also. And then a question that I often get is, can you file taxes in other states? Yes, I can. So federally, the rules are all the same. By state, sometimes it varies. Some states don't have state taxes. Some states are just easier than others. But for the most part, yes, I can do all the states. Here is how to reach us. You can go onto tgsaccounting.com, info@tgs.com, and my handle at Instagram. And okay, I believe if you guys have questions, and then we can go back to the T. Anybody have questions?
Someone said, do you have to file a Schedule C? I've always filed a 1040 EZ or 1040, even when I receive a 1099 from another company.
Well, the only other way you can avoid filing a Schedule C if it's under other income. I'm going to show you, I'm going to stop sharing my screen, and I'm going to find a 1099 for you guys to look at. And if you haven't, if this was incorrect, then I'm sorry, your tax person or you yourself have done your taxes incorrectly. And here's what I'm going to show you where you can determine that. And this is going to change in actually as of 2020. So it's going to look a little bit different. So you guys are going to have to pair made direct sales of 5,000 consumer products. So
and I do recommend that you guys talk to a tax professional.
I do, yeah. If you can talk to someone in your state, if, you know, if you need more guidance. But here is what I'm going to share my screen again. Oh, hold on, let me see if I can see this picture really quickly, because it changed the way it looks. So, okay. All right. So this is what the 1099 used to look like, or for the most part for many, many years look like. See this box number 7 that says non-employee compensation? And I believe, does anybody have, because I know I had my 1099 from Color Street in here. So the only way that you can get out of not filing the non-employee compensation, or if you have less than $600 in non-employee compensation, then you don't have to report it. I know Color Street will issue it even if it's less than $600. So if it's less than $600, you can go ahead and not file. You can continue to file a 1040 regular. You don't have to report it. But if it's over $600, you do have to report this income. In the non-employee compensation, unfortunately, this is a Schedule C item. You cannot get out of self-employment. Now, chances are maybe you won't get out if it's a little amount, because the IRS isn't gonna waste time or like effort, energy into trying to, you know, get more people just there. The only other box you can get out of doing that is box number 3, other income. That will take you out of self-employment tax. And the reason, that's why those two things are different. But if it's more than $600, you should file a Schedule C. If you don't, that is very much up to yourself. Here in 2020, the box number 7 is going to look like this. It says pay or may direct sales of 5,000 or more consumer products to buyer recipient for resale. And that's what it's going to look like. And chances are we might get a 1099 NEC, non-employee compensation 1099. The federal government wants to identify who is receiving non-employee compensation. And I think that's why they decided to go with a new 1099. So that's probably what you're going to see this next coming year in 2021 for 2020.
I'm looking up mine from last year, so it's downloading. So once it does, I'll tell you what number it reported in or whatever.
Reported. I'm pretty sure it's in box 7, but yeah, just let's be sure. Any other questions?
Okay, there's a couple more. A couple people are saying thank you for doing this, by the way.
Of course, of
I
course.
never, one says, I never do deductions. I don't make enough ever for it to make a difference. Okay. So say I make $10,000 a year from just Color Street and I have also a full-time job. Do I take all of my shipping receipts and gift receipts with me to my taxes?
No, if you haven't received, I don't know if most of you have downloaded the business expense schedule that I have. I know we've made it available on the team page. If you haven't downloaded that one, feel free to do so now. You don't need to take receipts to your tax account. Honestly, they just need the totals. The receipts are mainly for your documentation and for your purpose, like for your records, but not for the tax accountant. You basically have to give them the numbers. Some accountants are better about like saying, hey, I think you're missing something. Others really don't care. So they just take whatever you give them, because essentially at the end, it's really your responsibility to keep track of that information. So that's why that business expense worksheet is very easy to use. You can input the numbers and it'll spit out a number at the end, and there you have your totals. So you don't have to worry about it.
Our 1099s are in box 7.
Yeah.
Someone says, how much do you charge for a tax professional, or maybe you, or in general? She says, I know it varies, but just a ballpark idea.
Yeah, it varies. For me, it starts at $350 when you have a Schedule C, and it really just depends on how much money you make when it comes to the Schedule C because of how much work that goes into it. I saw somebody put something about does the Schedule C is for itemized deductions? No, the Schedule C is just a schedule on its own for business purposes. So you don't have to have itemized deductions in order to include the Schedule C. The Schedule C is just included because you have a 1099, which should be reported. If it's not, adjustments can be made to your tax return at a later time by the IRS if they deem that it needs to make a difference. But it really just depends on how much that 1099 is.
Amy is asking where to find the business expense worksheet. She put it inside of our team page. So if you go into our team page and click the search bar, I would maybe put tax worksheet or
yeah, it's called business expense worksheet or something like that.
Or search Damari.
Yeah.
As far as your friend in our team page, because there's lots of things.
Oh yeah.
Someone says, I've talked to a tax person and she said that if you're self-employed and don't make 2,000, you don't have to report. Is that still correct? From Illinois.
From Illinois. No, the rule is really 600, but honestly, it's like, it has to do more with like, how much expenses do you want to take as far as a deduction is concerned? I mean, I don't know about you, but when you're first starting off the business, you do have some expenses. Now, losses can be up to 3 years before the IRS again can deem it as a hobby. But that doesn't necessarily mean, if you have losses, that doesn't necessarily mean that you can't take it past the 3 years. You can take it past the 3 years. It's just that you have to make sure that you keep a record of the losses, right? Because in this business, it can fluctuate for everyone. And some months are good, some months are not good. But if you want to take the deductions and the money that you've invested in your business, then I don't know, it's up to you. Does it work out for you to report your losses versus not? So you can say, well, I have $2,000. I don't know that $2,000 is the mark, to tell you the truth. I'd have to look it up because I can't think of, off the top of my head, I can't remember if there's a specific amount. It might be, I was thinking 3,000 because of California, but it just, I think it depends. It's around there. So you might be able to get away with, but if you don't want to show any expenses to offset any of that, then I guess that really just is up to you.
Do you want to touch on like what my PayPal thing is? I think that is maybe a common theme, you know, like.
Oh yeah, for you on that. Yeah, we definitely want to talk about that. And then should I use cash? You're always going to use cash. You don't use accrual method. If I have a large inventory, you're never going to use accrual method. The reason why is because you're double dipping. So we as stylists don't hold any inventory technically. The inventory is not our, like, we purchase items and that would be your deduction, right? The items that you purchased because you're holding on to them and you're going to be selling them at a later time, but you're not necessarily, because then you have to track how much is in, how much is out, and then you have to know your accounting, LIFO, FIFO, and straight line. So I can become an accounting nerd if you want it, but you guys don't. Make it simple for yourself and just take the expense as you've taken it. So like, let's say I order for myself, right? Like I order whatever, my $300 worth of stuff. I'm going to take the deduction of the $300, whether or not I sold that inventory, because at some point I already made commission on it and I already sold it to somebody else. So I don't want to keep track of the inventory.
Shannon put the
sell sets in 2021. No, because cash basis is always when it happens. You never want to do accrual basis. Accrual basis is very, very specific. So you have to be sure that you're keeping track of, okay, who wants to pay taxes on money they haven't earned? That's accrual basis. So in any accounting method, you don't want to pay taxes on money you haven't earned. And if you think that you're going to earn something, then you'd have to track how much money do you potentially think you're going to earn. So in inventory, you would have to say, I potentially have, I'm going to make up a number, $10,000 worth of money here. So you would have to report that. And that's where the cash and accrual. So you don't want to do that. You just want to take what you spent, what you earned, and move on with your day. When you get free sets from parties, what do we do with that? Free sets, nothing. I mean, the value of the sets are easy. If you want to take the deduction as far as gifts, if you're giving free sets, then keep track of who you send them to. How do you know if you have losses? If you do the expense worksheet, you'll know if you have losses. Right at the very top, I'm going to pull it up really quickly so that you guys can see what it looks like. Okay, so this is the business expense worksheet. Like I mentioned before, very easy. Here you would just track how much money you made either through Color Street or other sources if you sold things outside. And see at the top, the number changes right away. So it already keeps track. It already has a formula to keep track. Here is where you're gonna put, like if you have, if I purchase 300 nail strips, it'll automatically do the expenses up here. The other thing too, guys, you can track your miles if you're going to deliver or drop off at the post office. You can take the miles that you're taking from your home to the post office and then coming back. So that round trip, you can take miles deductions there. Or if you're visiting any place, marketing, that's another thing. If you guys are doing any farmers markets, any events or anything like that, that you have to pay for or that you're driving to, I suggest getting an app to track your driving. Then that way, again, you have record, you have consistency, and you'll know when you're going to an event or you'll know when you're going to the post office, because those miles can add up, and that is a deduction you can take in your Schedule C. Okay. Spreadsheet. Okay. Acronyms. I spent includes charges on my credit card when I place orders. Charges, what type of charges? You have like fees, like additional fees, merchant fees? I'm not understanding that question. Thank you so much. Thank you. Thank you guys. And we need to keep track of money collected from inventory sales. No, just the amount of the order. No, just keep track of when people pay you, because that's essentially the money that you're reporting as income. So whatever you charge in your parties, you know, when you're shipping out to individuals, because there's two things happening. The company pays you a commission based on what you sell or what you buy, actually, not even what you sell, maybe what you buy or what you sell, whatever that is, right? Our 25%, everything that we get, that's what they're reporting in the 1099. But the difference is that now you're turning around and taking whatever you purchased yourself, you're turning around and selling it for an additional amount of money. So you have to take that into consideration, that you're making money based on something that you bought because you're going to take the deduction for it. So that's where you want to keep track of those things. The other thing I'd say, because a lot of people do Venmo and so on, you know, with us, it could be a little bit difficult to determine what, like, as far as how much money we're making, because like PayPal, we had this situation with Julie. So if we're already making commission off of what we sell on here. So if you turn around and people pay you through PayPal, PayPal will automatically report a 1099K on any money that you make through PayPal. Now, is that double dipping? It's a really hard like indicator, because I think that for me personally, when I'm thinking about it or analyzing it, I think in the eyes of the IRS, it could probably seem like double dipping, right? Because it's almost like we're buying inventory, or we're buying, and we have to be very specific with these terms. I'm going to say inventory because I know a lot of us use that term, but it is not the proper term. So we'll say we buy inventory, we buy supplies for ourselves, and then we turn around and sell it. Well, we're already making commission off of what we buy. And technically it's an expense to us because we already made the money, right? We already purchased it. So we spent the money, we spent the money buying it, and we paid the tax. And we paid the tax on it. Exactly. So when you turn around and sell it and you collect money, is that really income to you? Well, that's where it can get a little bit sticky. It really depends on how much you make, I guess, is where I would say that, like, kind of be mindful, I guess, of where you're collecting this money from. I know a lot of people do Venmo and stuff like that. And to my other clients, I always say no Venmo, just because that has its own thing that I'm not going to get into right now, but I usually say no Venmo. But for you guys, maybe you could do Venmo, because Venmo doesn't report anything. So if you're not like, if you're kind of like, I don't really feel like reporting, but according to the IRS, you have to report any income you make. So I have to say that that is IRS tax laws, is that you have to report any income that you make.
I know you guys are asking questions about Facebook Pay and Venmo. They don't 1099 you. PayPal does if you're sending an invoice, but also remember that the charge that you're getting charged from the invoice, like when someone pays me for a set and it's in PayPal, that is right offable too. That little, you know, the payment, the fee that you're spending, and it's so much easier to keep track in PayPal. Where you have all of the information, where, you know, Venmo still shows it too, but Facebook Pay, where are you going to find all the information? Like,
here's where it's really like a thin line, because somebody asked about Square. So Square also issues a 1099K, which would mean that you have income. So this is why I say, like, you want to report what you spent on your inventory to offset whatever you're getting on either PayPal or Square, because those two things, they don't know where you got your inventory from. They don't know that you had to pay, or, you know, you're kind of putting the money up front. So that's your cost of goods, is what is considered. It's like your cost of goods sold. So you're buying an item and then you're reselling it. So that's what they're reporting in a Square, like 1099K. So all of those places will issue 1099Ks. I don't know about Facebook Pay. I've never used though, but there's some like Venmo and other places like that that don't issue 1099s.
mm-hmm.
Send through PayPal. They normally send my link and it comes through Friends and Family. Yeah, Friends and Family doesn't charge fees. So Friends and Family, and also Friends and Family does not mean services. So again, it's income that technically, I guess you wouldn't have to report, but according to the IRS, you do.
I wouldn't do it, but that's me. I don't know. I guess everybody's different. But
for us in taxes,
mm-hmm.
I say stick with one, to tell you the truth. Whatever it is, if you want to use Venmo, if you want to use PayPal. So the question was, which one is the best for customers to paying? Honestly, stick with one, because it's hard to keep track of so many different payment options and where the money's coming in and who's paying what and for what. So if you stick with one way of payment, then that way you can, you know how much money you made and how much you brought in and how much you actually spent on the material that you had to buy in order to go ahead and resell that. And do they send it directly to us? Yes, everybody usually issues
PayPal doesn't.
directly.
PayPal does not send it, guys. You have to look it up, but they do.
Oh, really? They don't send it?
They do not, but they send it to the IRS, believe me. So make sure that you go look.
They don't send you an email letting you know that it's available?
They don't send it physically to you.
Oh yeah, physically I know that, but I thought
not.
they emailed at least.
But you have to look it up. And I remember last year I was like, I didn't even realize it. They may have sent an email. I don't know about an email, but physical mail, they do not send it.
Asking which one was best to use for pay and taxes. I've only used Facebook Pay. Why I'm asking which one is best to use. Yeah, I've never used Facebook Pay, so I really can't speak on Facebook Pay. My point is just kind of like stick with one thing. So if Facebook Pay is what you're using, then you'll know how much money you have coming in from Facebook Pay. And that's when you'll use the worksheet to put on there, like, this is how much money I made and this is how much I purchased in like inventory, because you're paying taxes on it, like Julie had mentioned. So we're already paying everything up front. We're paying shipping, we're paying taxes, all that stuff. So you want to take the full costs of what you're paying against the income that you're making. Let's see. Anyone else?
And you guys, we can have her answer, if she feels so inclined, answer questions once I post the recording for this, and then I'm going to stop recording in a second. But I just wanted to say.
No, I don't suggest it. I mean, you can use invoicing. It's not necessary, but you can if you want. Okay, cool.
Yeah. Thank you so much for doing this. I know this is like a scary topic for a lot of people, and I don't understand it. And so I'm glad. You guys, that expense tracker thing is pretty cool. So make sure that you go, I put it in the comments, so make sure you download that too.
Yeah, get yourself and download it, guys, because I think a few people were making changes to it on the actual Google Drive. So
oh no.
Yeah, so make sure to download it for yourself so you can save a copy.
Okay.
Sorry, kiddos.
I'm going to stop the recording.
Okay, good deal.